Hey everyone, I'm back, and today we've got a unique trading challenge. This video is special because I'll be starting with just $1 in the account. It's especially useful for those who want to understand the market on a deeper level. We'll break down how to effectively combine powerful indicators like Keltner Channel, Supertrend, Vortex, and CCI to find high quality and precise entry points. Next, we need to configure them properly so they perform at their best. And starting with Keltner Channel, we'll change just two key settings, EMA period and multiplier. As for the colors, you can set them however you like. Keltner Channel is ready. In Supertrend, we only change the multiplier. In Vortex and CCI, we only adjust the period setting. With all indicators in place, you can now better understand price behavior and where it's worth entering a position. And finally, I'll show you my current settings. As you already know, I'll be starting with just $1 and using a 1-minute expiration time frame. So, you might be wondering, why do we need so many indicators? The answer is simple, so that we can read the chart and understand price movement as accurately as possible. It might be worth opening a buy position, but the trend is currently down. I've opened a down trade. Now let me explain the logic behind this entry and how the strategy works. The first thing I always pay attention to is the trend direction. In this case, we clearly see a strong downtrend, which gives us the overall bias to look for short entries. Next, the price touched the upper boundary of the Keltner channel and bounced off it. At the same time, the Supertrend indicator gave a sell signal. The third signal is from the CCI indicator, which turned downward, not from overbought territory. Even though it wasn't in the overbought zone, it had previously reversed at this level. And to confirm this, the Vortex indicator shows a crossover. The red line crosses the green from below to above, which further confirms the seller's pressure. The confluence of signals gave me the confidence to enter a short position. And the result speaks for itself. We're now looking at a setup that clearly signals a buy opportunity. The first thing we must evaluate in this strategy is the trend direction, and here we can clearly identify an uptrend. It's also important to note that the price is moving within the boundaries of the Keltner channel, and as the direction shifts, the Supertrend indicator gives us a signal. In this case, it's a buy signal. Next, we need to assess where the price is at the moment of entry, and that's where CCI helps. It shows that the price is not in the overbought zone, which is a critical filter that keeps us from entering during weakening moves. And finally, the Vortex indicator plays a filtering role for the Supertrend signals. Here, we can see the Vortex lines are starting to narrow, which often indicates a build-up before a strong move. Based on my analysis, that move is most likely to the upside. It's worth specifically noting the entry point. The trade was opened on a pullback, which gives a certain advantage in trading. We've locked in a profit. My analysis still holds, so I'm re-entering the trade in the same direction. We've secured the second trade as well. The price might dip a bit lower before moving up again. But let's not wait around. Alright friends, as many of you already know, I trade on Pocket Option. The link to the platform is available in the channel description, and through it, you'll also get a deposit bonus from me. If you're just starting and things feel a bit difficult, you can join my VIP group where you can copy my signals and learn in the process. It's completely free to join, and the link is also in the description. Seems like the moment's gone. Let's keep looking. This is what I consider a high-quality entry opportunity, so I'm going to place a trade from the deepest pullback. The price is currently moving within clearly defined levels, and right here, this candle is breaking through the upper boundary of the Keltner Channel, and next target is the resistance level. In such cases, a breakout to the upside often signals a continuation of the upward trend, and it works the same way in reverse during a downtrend. From other indicators, the Supertrend has already given a buy signal. The price is not in the overbought zone, and the Vortex indicator confirms increased buying momentum. Nice result. The balance is now at $26. Which is definitely a good sign. This setup could suggest a potential buy opportunity. The price has exited the oversold zone. However, the overall trend is still strongly bearish, and that's something I can't ignore. Not worth the risk, especially since I'm entering with my full balance. This setup reminds me of a previous one. Almost identical. In this case, all the signals align, making it an ideal moment to enter a down trade. Last second win. Nothing unusual, that's just how the market behaves sometimes. I see the moment. I'll be entering from the maximum pullback. That's often the most strategic point. We're back to the same currency pair, where we previously decided not to take the risk. The price moved upward, and if we had taken the trade back then, it would have been a winning one. But we made the decision not to go against the trend, and that was the right call. Even so, the fact that the strategy and indicators still worked, even in a counter-trend setup, says a lot. It's a strong confirmation that the system is reliable, even when we choose to stay out. Perfect. We got what we came for. The trend has reversed, and the current movements are a clear correction. We're now seeing the price breaking out of this phase. This is a clear signal for a downward move. This trade closes in profit, and it's important to understand that this result is not accidental. Let me share an important fact. According to statistics, over 70% of traders lose their deposits, not because of a bad strategy, but because they break their own trading rules. True trading mastery is not just about predicting the market. It's about pressing the button only when there's solid confirmation, not when it just feels right. That's why a trader's main task is to stick to their system and manage emotions. Alright friends, I've opened a $2,000 sell trade going against the main trend. Here's the logic behind the entry. First, the CCI shows the price gradually falling out of the overbought zone, which suggests that buyers are losing momentum. Secondly, that strong impulsive candle signals a shift in sentiment, the beginning of a pullback. Moreover, the Supertrend indicator issued a sell signal, confirming the setup. All these reasons are enough for me to take a position against the trend. It looks like this trade will be a loss, because I made a mistake. I went against the trend. I ignored the buy signal from Supertrend and relied solely on the CCI. Meanwhile, the Vortex indicator shows diverging lines, indicating that the price still has momentum and the trend is continuing. I'll try to recover, so I increased the trade amount. The trend clearly isn't weak. There's no sell signal, no point forcing it here. Let's take this trade on a different setup. I'm going to take a put trade, despite the current trend and even the Supertrend signal. Here's why. The chart has formed two candlesticks, resembling the hanging man pattern, a classic reversal signal. Price was pulled down twice, as seen in the long lower wicks, showing that bears are starting to test the bull's strength and determination. Yes, buyers did come back and push the price closer to the opening level, but the fact that there was strong downward pressure indicates that bearish sentiment is gaining control. This setup signals a coming reversal. These are the kinds of results you get when you understand the chart. And if you want to understand more, read candlesticks and analyze the chart. There's a detailed candlestick analysis course in our group, where patterns and entry levels are thoroughly explained. It's a valuable resource for those who want to deepen their knowledge and learn to understand the market better. And it's available in our group, completely free. All of this is for your development and growth as a trader. So, this will be a put trade. Right now, on the currency pair Swiss franc against Japanese yen, we're seeing a sharp price drop, coming down from the overbought zone. A doji candle has formed on the chart with a small body and long wicks on both sides. This is a classic sign of balance between buyers and sellers. Such candles often indicate a potential short-term reversal or at least a corrective pullback to the upside. So instead of risking an early reversal entry, let's focus on finding a more stable setup, ideally with confirmation and in the direction of the main trend. I found a currency pair that perfectly meets the conditions. It's showing a well-defined uptrend, and the indicators are confirming a strong and steady upward movement. This is exactly the kind of setup where we don't go against the market, but rather use its momentum to our advantage. And here it is, the result. The balance has grown to over $12,000. And this is what we've achieved step by step. No magic buttons, just solid market analysis and a clear understanding of price movement logic. This proves once again, it doesn't matter how much you start with, what matters is how you approach the process. If you're willing to learn, test, accept mistakes, and keep moving forward, the market will give you a chance. The key is not to look for shortcuts, but to build your own foundation of knowledge and experience. Seems like the market is opening up one more opportunity. Let's not miss it. Not the most confident finish, but we got the win. With that, our incredible challenge comes to an end. Thank you for watching and see you soon.